This is Eric with Mother.com with the weekend market analysis for the weekend of January 11th and January 12th, 2020. This is how US markets closed at the end of Friday's session. Let's call it a little bit of unchanged. Let's take a look at the closing numbers for the end of the week. We can see that for the week, S&P 500 was up 0.94%. For the week, the NASDAQ was up 1.75%. And for the week, the Dow was up 0.66%. But as I have been stating, that's not the most important aspect of what happened here or what has been happening in the market. We see that the Dow is now above 69.1, which just means more stability to this market and more potential to the upside unless this market rolls over and we see the Dow drop back below 69.1. But as long as we are holding above 69.1 on the weeklies, expect the market to be strong, just as we were strong when we moved above 69.1 here in late 2017, and the market took off after this breakout here. So we know what to look for momentum, and it's very simple. I've been saying this for weeks. As long as we are holding above 69.1, this is a scary market if you're trying to short, because until we drop back below this number, all systems are go. In fact, the more we stay above 69.1, the more there's a probability of a hyperbolic finish to this move. So right now we are kind of sloping this way. But the more we stay above 69.1, the more there's a likelihood of accelerated move to the upside. So one needs to be careful when trying to short this market. And keep in mind, this can take months. You can see here it took about 4 months, 4 to 5 months during this very desirable bullish period for those who are playing the market from a bullish perspective. Now, we see a good example of what happens when a market is rejected at RSI 69.1 here. We just came to that 69.1 level, kissed it, and we were rejected. And that accounts, from a technical perspective at least, why we would eventually roll over here and see this drop in late 2018. So, I mean, that's just pretty much what we've been talking about for many weeks. As long as the Dow or the NASDAQ or the S&P 500 are holding above 69.1, we can see that the NASDAQ's been holding above that bullish threshold over the last couple of weeks. And guess what? The market is responding as we would expect, which is this uptick. In fact, momentum is picking up. Why? Because we continue holding above that beautiful threshold, the 69.1 level. By the way, this is my own researched number, but there is a good reason why you end up with this number if you understand how to reverse engineer the 1.618 constant. Now, that's the NASDAQ. Of course, S&P 500 has also been holding above 69.1, and because of that, bulls are very happy to see the market respond accordingly. And guys, come on now. As long as we are trading above this threshold on any of the time frames, expect this market to be stable at worst. And as of the close of this Friday, on the long-term monthly chart, take a look at the S&P 500, still holding, albeit just above that threshold. So as long as the monthly is above 69.1, these markets are still very strong. And we can see that the NASDAQ is trading at about 70.7. So the momentum here, as far as the NASDAQ is concerned, continues to be strong on the monthly. We can see the Dow is struggling a little bit here with Friday's pullback. So the Dow is one we can watch to see how it responds. Now, in a prior video, I mentioned the following. So as long as we are positive for the month, positive for the year, So for the month, and even positive for the year, as long as we are positive, this market should remain stable to bullish now, as long as we are positive. But if we roll over and turn negative for the month and also for the year, then we can start looking at how the charts look on the monthly time frame, because that actually might not be a good look. So right now, if we are going to be neutral observers, the market is positive for the year, positive for the month, so the bulls are still in control. Now this can get tricky because our natural inclination is to think that this cannot continue moving higher. I mean, naturally, we are all feeling that this market is extended, which is, I guess, a natural reaction to what's been taking place. But if we ignore our natural, expectation that this market has to pull back and just stick with the technicals, let me show you something interesting. So here we are just moving above 69.1, right? And this is extended. And we are thinking, you know what? I don't know, this market is just about to collapse. That's what we are thinking in our minds. And we could be right. But take a look at the following. So this is a long-term monthly chart from 2012. This period here was 2 years in the making. In fact, more than 2 years. And during that period, the RSI was well above 69.1. This is the NASDAQ. And see, 2 years of a bullish market where, yes, you get pullbacks, but they're shallow. Ultimately, the momentum is very strong to the upside. This is 2 years of grinding to the upside. Now we have another example on the same chart here, where, as you can see, again, we have 1.5 years to the upside as the RSI held above 69.1 again. And again, this was almost 18 months of straight just killing it to the upside. Yeah, you get pullback, but they tend to be shallow and short-lived. You get pullbacks during this phase. You get pullbacks, but they tend to be shallow and short-lived. So, if you have short positions in the market, this is the last thing you want to see. The last thing you want to see is this market keeping the RSI above 69.1. Because again, as we've established, it can go on for years and years. In other words, if you'd like this market to drop, and if you want to profit from a down market, it would have to be rejected first and foremost. You'd have to see visual evidence of rejection back below 69.1. Which brings me to another important observation. So right now, if we take a look at the monthly charts, with the NASDAQ holding above 69.1 on the monthly, and you can see now the MACD is moving to 3-year highs, at the very least 3-year highs here. That means, as of right now, we have a market that meets the minimum requirements. Ultimate Moade breakout, minimum requirements have been met. So, again, we see another reason that this is a scary market if you're short, because as long as it meets the minimum requirements, which it is doing now, the upside is unlimited. And in fact, I noticed there was another instrument, the VTI, which tracks the total stock market, I believe globally. And again, we can see here, yes, RSI is above 69.1. And now, one of the MACDs is breaking out. So, in theory, as long as we are above 69.1, all systems are go. Now let's switch up a little bit, go back to the S&P 500. We've established that the monthly is still bullish above 69.1. We've established that the weekly is still bullish above 69.1, but the daily and the 2 hourly are right now showing negative divergence. So if you're looking for any reason, this is the 2 hourly showing negative divergence. This is the daily for the S&P 500 showing negative divergence. If you're looking for any reason for a potential market pullback setup, this could be it. But I wouldn't say that this is a really big momentum changer to the downside. So yes, we have negative divergence, but don't expect a big move lower until we break this line here. The recent 2 hourly RSI lows need to break, and the MACDs would need to break down. So it's going to take some time and some energy to break all these trend lines. This would have to break before we can get any true momentum to the dip. Can it happen? Of course it can. But until we see it, there's really no reason, in my opinion, to be suspecting that the market is giving us a sell signal. Sell signals tend to come later, not at the highs. So in other words, until this daily RSI lows line is broken, until we break this, we can't really be pounding the table for a potential strong move lower. Also, another way of looking at this is until we break below the 50-day moving average, or until we break below the 200-day moving average. If we are going to be objective observers and not pick direction in advance, until we break these major moving averages, this market, even with pullbacks, is still stable. So it's going to be down the road when we get to an area of testing the 50-day moving average, whenever we get to testing the 50-day moving average, whenever we get to testing the 200-day moving average, that we can start looking at the potential for a market that could be ready for a massive bear market. Right now, it's trading well above the 50-day moving average, so even a pullback would still be within the description of a stable, healthy pullback. Now recall, over the last year, this market's been coming back to the 200-day moving average and finding much needed support. And those were healthy pullbacks, because here we are at new all-time highs. So until we break the 200-day moving average, that's when, and that's going to be weeks down the road. In fact, we have good examples of support at major moving averages. We can see here the Japanese market was down this week, but guess what? It just conveniently found support around the 50-day moving average. We can see the same thing here if we take a look at the Nifty. Had a drop this past week, but guess what? It found support at an upward sloping 50-day moving average, right? Nice. And within days was back to recording fresh intraday highs. Now take a look at this. So we can see that at the lows, if we draw a line connecting RSI lows, we can see at the lows of this past week, this market came back to test that line. That line held. There's also another line. Based on my uniformity method on the daily, we can figure out where we came off recent lows, which is here on the RSI, which is this price action, right? We know that the market hasn't been back to those levels since then. So what we do, we take that information and use it. Notice how it gives us pullback re-entry areas. Here, we bounce above the line, nice lows. And here we can see double bottom support over the last week, and the market did bounce up. Almost looks very easy. The green line and the blue line did offer support, and of course we mentioned the upward sloping 50-day moving average. Same thing here with the Indian market using the uniformity method. We can see that we came off the lows here. which is this area here, this RSI movement. Take that information, draw our uniformity line, something like that. And again, even at the lows of this week, we came back to test this line. We held, and guess what? We moved back up. What's the point? The point is it's going to take a lot to kill these markets. Can they eventually be killed? Of course. In fact, take a look at the 2 hourly. Now, the 2 hourly, as I mentioned, across the board, there's a lot of 2 hourly resistance. We can see here we are attempting to break out as far as the Nifty is concerned, but there's a problem with this breakout attempt because we have a steep negative divergence. That's not a good look. But we saw that with the S&P 500 also. So the 2 hourlies are causing a problem. You can see this. Take a look at the Vanguard VTI. So ETF that tracks global markets as a group. We can see an improvement in prices. Again, just like the S&P 500, there is a decline in the RSI. That negative divergence could set the stage for a pullback. But again, even here, we take a look at the daily. We can see that it's going to take some energy and some time for this market eventually to break below the upward sloping 50-day moving average and upward sloping 200-day moving average. In other words, what I'm saying is it's going to take some energy before these markets really see a major sell signal. And don't forget, it also depends on what happens when we come back to test the RSI 50. So the last time we came to test the RSI 50, guess what? We found support, which is here. What happened after that? Well, you can see for yourself. Something I've been talking about for years. RSI 50 support is generally good for any instrument. Take a look at these other examples here. In 2019 May, double bottom here, nice short-term lows. And RSI 50 rejection tends to be a bearish short-term signal. There you have it. All these are original concepts by yours truly, JJ. Woo. This week, we can see that the GLD is doing its best to break out on the monthly. Good price breakout. What is needed here is for the RSI to move back above 69.1. It would need to be above 69.1 if it's going to get true upside momentum. Otherwise, MACDs are perfectly where they need to be. One of the MACDs is at 3-year high. So GLD looking good. GDX, not so good. The reason why I say not so good is right now we are looking at a failed breakout. So this could be a problem. Remember, failed breakouts are notorious for taking instruments lower. It's not a good look right there. So if GDX cannot break out, I would say that the mining stocks and even gold are not going to be moving any higher. A price breakout is needed. Otherwise, this is not a good look. In fact, if you take a look at a long-term monthly chart for GDX, this has been a trouble spot as far as the RSI is concerned. So this is a concern. It doesn't take much to see that this has been a problem area for GDX going back many years. So at the top here, that's where it stalled, came close here in 2016 and stalled, and now this is double top. Not good. In other words, the only way GDX can move higher, it's the only way, people, is by clearing and moving above that blue line. Right now, not looking too hot. Take a look at SLV. We would need to clear the breakout level, the recent monthly closing high from 2019, if this is going to be a true momentum area of the market. Otherwise, the more we are seeing a failed breakout, the more this is not good for the metals. Keep in mind, silver has also been struggling around current levels. There was a major break here in 2011 of the highs. And you can see that this has been an area of resistance as far as the monthly behavior is concerned. And here we are seeing multiple rejections. So the only way silver can really ignite momentum is by price breakout followed by the RSI breaking out above this blue line. Keep in mind the blue line is conveniently around that 61.8 monthly RSI. By the way, I'm happy to report that when we had this spike, we took full advantage of this spike because we saw this breakout taking place, and this ETF did meet the minimum requirements for the ultimate move at the breakout, so we did not miss out on this powerful move back in 2010. We took full advantage of that timely. This past week we saw USO take a huge dump. Not good. We can see that the RSI is coming back to where it's been stalling, and there you have it, another rejection around this area here. Not a good look. You can even see price being rejected. I have to say this has been a tough one to follow. I don't pay too much attention to it because it just doesn't have the look of a quality instrument. Sorry to say, but it just doesn't look strong. It's been struggling around current levels. The last couple of times it's been trying to move above the blue area. It's been rejected. Just rejection all over again, here and here. I don't know. It's just not, it's not there. On the monthly also, if it drops back below 50, expect a big down month. The last time it dropped below 50 was here. We had a big down month. So, I don't know. Just not looking strong. Now, if we take a look at crude oil itself, we can see that there is a level here, something I've been talking about for years. I think I've talked about this line for, what, at least 3 years. So over the last couple of years, every time we come to this area and we are rejected or we drop below this area, crude oil sees a massive sell-off. For example, here we broke below it. Keep in mind we come off this break point, a major break in 2014, and we see resistance here in early 2019 for the highs there, and now it's turning into resistance again. Hope you can see that. Let me draw it again, because I'm nice like that. Alright, so that's the break point, just above 50. You can see how it's being rejected again. So this is gonna be an issue, a problem, a resistance level until it can move above that area, just like it did here. Moved above the blue line and had a multi-month move to the upside. But that's it over the last couple of years. Other than that, it's been struggling. So I would look for other momentum areas in the market because crude oil doesn't have the momentum. As far as Bitcoin is concerned, I would expect that as long as it is holding above RSI 50, we've already seen examples of why that is important. As long as it is holding above RSI 50 on the monthly, we can say that it is stable to bullish. And if it can't hold this RSI level, if it drops below RSI 50, expect things to really change and for this to see a massive drop below the 7,000 area, which is the recent monthly closing low area. So as far as BTC is concerned and the cryptos, as long as we are holding above the RSI 50 level, I would say it is stabilizing after this recent pullback here. Is it back to momentum like it did here? And the answer is a big fat no. Now, I don't want to say I told you so, but I will. Around here, January of 2018, I told you guys. I know at the time it looked fantastic to say that, but I told you it's not until 2021 at the latest people, not at the, no, at the earliest, sorry, at the earliest. It's not until 2021 that Bitcoin can gain this type of momentum again. gonna take at minimum 3 years to reset this massive move. Right? So this was a huge move. And the only way to reset it is you have to give it multiple years, which is 3 years. So 3 years. This is at the earliest. Might be longer. And the reason is very simple. You need 3 years to reset and get a new ultimate worthy breakout look. As you can see here, if you are new to this, RSI moves here and MACD moves, what the visual confirmation in 2016, 2017 that Bitcoin was about to take off. Right? You can see all these multiple entries, multiple. This was confirmation that Bitcoin was about to take off, and boy did it. You need this before any instrument can take off running. This is Eric Mwatha with Mwatha.com. As always, you need to master what it takes for an instrument to explode. Peace and blessings. I am out. Cheer. Enjoy the weekend. Are you still there?